We've got a very wide range of economic indicators out to start the week, and the big one everybody was keenly eyeing on, of course, were those Q2 GDP numbers. First half GDP figures also came out today. Let's start with second quarter growth first, coming in at 7.5% year on year. That's spot on with economists' expectations, but of course, that number still represents another quarter of growth slowing in the world's #2 economy as weak external demand continues to drag on output here at home. It also shows the country's continuing efforts to rebalance its economy, which means slower and better quality growth. Let's bring in BizAsia's Yin Hang, who was at a press conference earlier today that oversaw the release of Monday's major data points. Yin Hang, so I guess today really marks a major test of resolve for policymakers here to stay the course and rebalance the world's second largest economy in the face of weaker data, I think.
You're right, Michael, about this. And Sheng Laiyun, the spokesman of China's National Bureau of Statistics, says that figures actually show that China's economic performances is overall stable in the first half of this year. Meanwhile, it's also a sign that those policies have been adopted by the Chinese government to boost its economic transformations are working right now. And as you can see from the data showed today, that it shows that overall China's economic performances are within a reasonable range. Take a listen to this. Figures released by the National Bureau of Statistics show that China's gross domestic product grew 7.5% in the April to June period this year. This marks a slight slowdown from the 7.7% growth the economy logged in the first quarter. The statistic agency attributes China's economic restructuring and weak overseas demand as the major causes for the slowdown.
A slowdown in economic growth represents lower productivity, and lower productivity is not unique in China. Economies that are undergoing economic transformation will all face this same problem. Meanwhile, we continue to face international challenges. The global recovery is progressing at a slow pace. Also, the slowdown is a result of policies adopted to rebalance China's growth model and push forward with restructuring.
Previous data show that China's export fell for the first time in 17 months. Meanwhile, the country's factory gate deflation also persists in 16 consecutive months. That all backs the view that the country's economic growth is losing momentum. Sheng says China's economy is heading towards more balanced and healthy growth, which will provide good opportunities for its economic reform and transformation.
China's economic growth is stable. Its economic restructuring is progressing. China's economic transformation is gaining momentum steadily. Meanwhile, new jobs are increasing. Overall, China met its growth target of 7.5% in the first half of the year.
Chinese Premier Li Keqiang has been working hard in pushing for balanced growth and economic reforms over fast-line growth. This suggests the government is in no rush to offer fresh stimulus to revive an economy in a protracted slowdown. He's also calling for the country's banking sectors to better use its stockpile of capital to speed up restructuring while cutting industrial overcapacity. The Chinese government has set a 7.5% growth target for 2013. Yin Hang, CCTV, Beijing. And now let's comb through some of other economic data released this morning. First, China's foreign asset investment figure up by 20.1% in the first half of this year. Fixed asset investment is a key driver for China's economic growth. The figure came in this morning just a little bit below market expectation. Meanwhile, property investment went up by 20.3% in the first half of this year. Actually, compared with the same period of last year, that figure's about 3.7 percentage points higher compared with the first half of 2012. Meanwhile, we also got some evidence of China's slower economic growth. Industrial output, which is a sign of the industrial profits in China's industrial sector, came in just 9.3% up in the first half of this year, which is a little bit lower than the market expectation. Meanwhile, retail sales sector went up by 12.7%, which is slightly higher than market expectation, which shows that China's consumption sector is still attractive for lots of investors as well as consumers, and which can be the major pillar for China's economic growth this year. That's all from me. Back to you, Michael.
All right, many thanks for a more complete picture of China's economic health for the first half of the year. So by now, China has released most of its key economic figures for H1 2013. We're waiting for those FDI numbers, which may come out sometime between now and the 18th. Let's take a quick review of where these numbers currently stand.